Look, there's been a number of topics that we've been getting asked by Business Advantage members to talk to, and there's a big three that have consistently been requested over the last few weeks. Those three are around customers and what customers are wanting now, given the impact of the pandemic, changed lifestyles, rapid uptake of technology. The second area that almost half of the businesses that are talking with us are asking about is cash flow management and relationship management. And that's very much the topic of today's webinar. The third area is everything to do with the internet, websites, the essentials as to what's required on websites. And at the end of today's session, I'll be giving you a very brief overview of the next webinar, which will be taking place on December the 1st. For Business Advantage members, as you know, there is a copy of last month's live training webinar available inside the Business Advantage portal. It was a terrific conversation and discussion where we shared a lot of the latest research around both what small business customers are now demanding, as well as what individuals and consumers are demanding with respect to the impact of the pandemic on their preferences and what they value and what businesses can do now about better understanding that and better being able to deliver it. But today's session is all about improving cash flow and key relationships in your businesses. And I'm very pleased to be joined by three additional members, and we're going to run this as a panel session where they're going to share their considerable practical experience with us with respect to these topics. I'll be acting as the host and moderator. If some of you have got your microphones on, I would please ask you to mute them. As we go through today's session and questions come to mind, please use the chat function or the Q&A function at the bottom of your Zoom screen. Get those questions in, and when we get to the end of the formal panel discussion, we'll then go through those questions. Let me start by introducing our panel members. And the first person I'd like to introduce is Kim. And Kim, I might ask you to tell us a little bit about QC Law. You're the founder and the owner, based up there on the Gold Coast. Tell us a bit about who the business serves and why is it that customers choose QC Law?
Thanks, Bill. Hi, everyone. I'm Kim. I'm the principal solicitor and director owner here at QC Law. Our motto is, we are your lawyers for everyday life. As Bill has mentioned, we're up here in sunny Queensland on the Gold Coast. The reason that I set up the firm is I wanted to change the way that lawyers are perceived. And the clients that we served are from everyday mum and dads for things like wills and conveyancing, small and medium enterprises for things like company law, setting up businesses, property development, right through to large corporations. We look after everyone's needs from conveyancing, wills and estates, succession, company, business, and criminal law. And we want to do things differently. We want our customers and clients to know what they're going to be charged, and we are a fully fixed fee law firm. So that's a little bit about us and why we do the things that we do and who we serve.
Thanks very much, Kim. And we'll be asking you a few questions during the session, particularly around how you go about sort of, running your own business, and also some of the things you're seeing with some of your key small business clients in this area of cash flow improvement and managing key relationships. I'd now like to introduce Tim, very experienced entrepreneur, and has a particular company recently started with a real innovation in the whole area of cash flow financing. Tim, can you tell us a bit about Possible?
Yeah, sure. Thanks, Bill. So my name's Tim. Run a company called Possible, and Possible is all about cash flow for bigger plans. So we exist in the property real estate space. We have a whole host of products helping vendors get access to funds up front to help sell their properties, unlock their deposits. We then help agents to smooth their cash flow as well by early access to their commissions. We help mortgage brokers, and we help conveyancers as well with their estimated fees. So it's all about enabling businesses and individuals to reduce the financial pain that occurs as part of that property sales process. That's where we exist to help everyone that we interact with.
Thanks a lot, Tim. Having gone through the process recently of buying a property, my wife and I, it's much more complicated than what I remember it being, but things like the PEXA platform that our conveyancers is using and some of the financing approaches they're taking using Possible, certainly making it much easier for us and much easier for them. I'd now like to introduce Hannah Gibbon, I'll let everyone know she's a chartered accountant in terms of her professional credentials, and also one of our financial coaches at Business Advantage. Hannah, can you tell us a bit about the sorts of things you're doing and the sorts of clients you're serving at the moment?
Yeah, so my company is called XFOS, and we take the pain out of growing. So we essentially work with small to medium-sized business, and we make sure that while that progression is happening, and then you have to expand and contract in line with the various conditions, that you can in fact do that. So I take care of system automation, productivity and profit improvement, and well and truly within that space is cash flow. So looking forward to presenting to you today.
Thanks a lot, Hannah, and thanks to the other panel members. Yeah, that's a photo of me pre-pandemic, sporting my most expensive tie. That's my Harvard Business School tie. And 30 years ago, I graduated from Harvard, so a long time ago. And back then, it cost me $100,000 Australian for that tie. So I can't imagine in today's dollars, particularly with property appreciation, what the cost would be today. So we're going to spend a little bit of time on a model around relationships and relationship management and the impact on what makes a successful business and therefore the cash flow in the business. We'll talk a bit about the cash flow cycle, the notions of sort of, pulling through, payment sooner, pushing payments that you have to make out, and then the timing and the gap, and understanding what the gap is, the length of the gap, the size of the gap. Then we'll look at some of the traditional and then some of the more innovative ways of funding the gaps. And we'll get Hannah and Tim will help us there in particular. Then, of course, it's pretty simple, right? In terms of investing, you buy low and you sell high. And we know in any particular business, if we can have lower expenses than our competitors, that will make us more profitable. And if we have higher levels of revenue per product or service that we sell, or we can uncover other opportunities to generate revenue that our competitors don't, that also makes us a more competitive business, more profitable, more cash flow positive, more successful. We can end up with more business success with less business owner stress. And then as we do with all of these sessions, we'll then talk a little bit about some of the additional tools and the advice that's available for the Business Advantage members that are on board. And of course, we encourage everyone that's here either as a guest of one of our sponsoring partners or who have purchased a ticket to come to today's webinar to have a good look at coming on board and joining up with Business Advantage. We'll then go through the questions and then I'll wrap up with a bit of a summary as well as let you know about the December the 1st topic. And what I want to share with you is a really simple model that $100,000 Harvard Business School tie got me exposed to 30 years ago. And in fact, it's even more true today than what it was back then. And it's pretty much a model that says, look, we can think about relationships and cash flow in a business in terms of a chain and in terms of key links in the chain and the sorts of things you want to be achieving with those links. And the first one is all around having highly engaged staff. Now, what do I mean by highly engaged staff? And they might be employees, they might be contractors, there may be key suppliers that your business depends upon because you outsource certain elements to the business. When you've got engaged people on the team, they stay, say, and strive. And what I mean by that is they stay with you. They want to keep working with you. So therefore, you have less recruitment costs, less onboarding, less training costs, more consistent quality of service, high level of productivity. They say good things. You'll see any number of high growth tech companies these days are very focused on encouraging existing engaged employees to say great things about working there and to look to tip into the funnel of new employees, friends that they've got that might be looking for new opportunities and new roles. So there's positive word of mouth from very engaged staff and employees, and they strive to improve themselves and their contribution to the business. They're not purely a wage slave. They want the business to be more successful. They want to be more effective. They want to grow and develop. Now, when you've got highly engaged staff, that then drives much more satisfied customers and more loyal customers. Now, what do I mean by loyal customers? Loyal customers are those that stay, say, and pay, or they're the raving fans. They're the great advocates. So they stay with you, you retain them. Next time they need your product or service, they immediately think of working with you. They're not thinking about going anywhere else. They say great things. Increasingly that means positive reviews on various internet sites, or when their friends and relatives ask them, hey, we've just bought an investment property. We bought our home 15 years ago, and this is our first investment property. And we've got to get someone to do the settlement process and conveyancing for us. I know you guys bought a property a year ago. Who did you use? What were they like? So again, having highly satisfied and loyal customers is going to lead to positive word of mouth and help you attract more customers to the business. And the third thing they do is they pay. Now, we all know that at the end of the day, we get what we pay for. Even though the internet appears to be a race to the bottom and lowest price and everyone focuses on that, the reality is that all of us make decisions based on our perception of who's providing us with most value. And that value is our perception of the benefits we're getting, minus the price and hassles that we've got in getting those benefits. Now, it's one thing when you're buying a laptop and exactly the brand you want, exactly the model, you're going to get exactly the same warranty, etc. And you can go on the internet and find the lowest price potentially. And you might say, well, look, superior value for me there is the lowest price because the benefits I'm getting are exactly the same. But I know many of you participating today have service-related businesses, and that's where there's significant opportunity to differentiate around the quality of the service, the experience that you provide, and the ability to potentially charge more than people that will just look at what your service is as a commodity. So the great thing about loyal customers is that they stay, say, and pay. Now, what does that mean for the owners of the business? Well, it means improved business performance. And from a cash flow point of view, it means much more predictable cash flow and a much higher level of positive cash flow. So vis-a-vis your competitors, you're making more profit. As the owner, you get to earn more, but you're also able to reinvest some of that in improving the engagement of the staff, which could be through new processes, additional training and personal development for the staff. If they're more productive, you'll have less staff that you'll need versus competitors. You can pay them a bit more, leading on again to more satisfied customers. So there's a very, very positive sort of circle of reinforcing success when you think about these key relationships and what you want people to do in these relationships. But I think the first question, Kim, is one I'd like to swing over to you. When you think about, your business and you started it 5 years ago, what are the important relationships with respect to your business, and what are some of the things you've been doing over that 5-year journey to really improve those relationships to power the cash flow?
So for us, our whole business is built on referrals. And how do we get referrals? We build relationships. Word of mouth, as far as I'm concerned, is still the best form of referral you can have, whether that's staff giving you word of mouth, ex-clients giving you word of mouth, or current clients referring you on. Building strategic alliances with other business professionals and other small to medium enterprises is huge for us. Now, those relationships aren't formed overnight. It's built on the know, like, and trust system. So you get to know each other, you really like that person, and then you start to trust them with your clients. So we've built a lot of our business around being strategically aligned with businesses like real estate agents, accountants, financial planners. We all come together and serve the client. Clients have a life cycle. So I don't think really they're a client if they've used you once. They're sort of like a prospect. Then they use you twice and they come on and they're sort of more like a client, okay? Then they start referring you on to their friends and family. Then we like to call them our raving fans. So QC Law has their raving fans. These people are what build your business. And this takes time, but keeping those relationships and maintaining them as well. So if you get aligned with a strategic partner, you need to keep that relationship going. You just don't refer them and then it needs, you need to work together and make sure that relationship succeeds. So we catch up with them quarterly. Our clients, we do a lot of staff meetings once a week, and we talk about our strategic relationships, making sure that they're growing and thriving and seeing what we can do better for our clients. So relationships for us is everything. Without those relationships, we wouldn't have clients, we would not have a business. It's that important.
That's fantastic, Kim. Now, Hannah, with respect to your business and the professional services that you provide to a range of businesses, how do you think about the important relationships, and what's your strategy for strengthening and building them?
Yeah, so I guess it comes sort of two-pronged for us, because we go into businesses and ensure that they themselves have their sort of center of influence and make sure they know sort of who's in it and who's out. But for us in particular, it's exactly like Kim said, a relationship isn't built overnight. It takes time, consistency, and trust. And I think so long as you sort of step up to the plate when it's required, and obviously there's a give and take, it's important for it to flow both ways. But definitely, it's the 80-20, 80% of your business comes from 20% of your relationships.
Thanks, Hannah. Now, Tim, you've got a pretty innovative business, and I've spent a bit of time on the website, and I've watched my conveyancer interact with it, and literally I think I could use it all, and the conveyancer could use it without ever having to talk to a human being. Can you share with us, again, how you're going about growing this business, and how some blend of, the digital side with, having human beings, doing the business development and building the relationships, how you're getting those things working together?
Yeah, I'll probably echo the comments from both Kim and Hannah about that broader ecosystem. An ecosystem is probably like the really big word that we use with all the different partners that we work with, because we have products that span a number of different areas, but they're all tied to that central same thing. And if you're trying to help each other where you've all got that common goal at the end of the day, I think for us, that's obviously removing friction when you actually start using our product is absolutely key. And we've got that digital scalable side of things, but you also then want to work with other partners to understand, is the solution the best it can be now? Is there anything else you need to add on to that? Is there any way you need to adapt it for whoever you might be talking to? So it really comes down from a relationship standpoint to who are the other people in that ecosystem that are all powering towards that same mission, and how can you rally around that together for the best outcome?
Thanks, Tim. And it's interesting you mentioned the word friction. I was, just reading some material on the weekend, from an American author, psychologist, who talked about both fuel and friction. And a lot of the research they've done with a number of different businesses where the customer was ready to either buy it at the checkout and do it, or to order a particular product or service that was customized, but then there were reasons stopping them from doing it. So, he was making the point that many businesses want to pour more fuel on. So let's make the value proposition even better. Let's reduce the price, or let's throw in some extra benefit. Let's focus on that element. Whereas the research that they undertook with these number of different businesses, actually, there were friction-related issues. There was, and one of the examples, that he gave, and a business that I'm quite involved with, is something called Sleeping Duck, which is a mattress business here. And one of the issues with people buying mattresses online is, well, I've never laid on it, whereas the traditional way is you go to Captain Snooze and lay on the thing. So that was one issue. So they came up with, look, just return it, any time in the first 100 days, if it doesn't work. But then the second thing that stopped some people buying was, what am I going to do with the old mattress? And particularly during the COVID era of, what's going to take for me to take it down to the local government's, depot where I've got to take it, or who can come and pick it up. And, they've found by reducing the friction, so they'll take your old mattress away if they have a premium service to take the mattress removal. A number of other furniture companies are doing that now, people like Appliances Online. When they think more broadly about the customer experience and what we could add as fuel around perceived benefits minus price versus what can we remove from a friction point of view, made an enormous difference by really considering and understanding the friction element of things. Yeah, I want to talk a little bit now about the cash flow cycle, and we'll get Hannah. That's right, you're our closet chartered accountant there, Hannah. But of course, at the end of the day, with the cash flow cycle, we've got cash coming in some cases after certain goods and services are sold. The cash comes in. We've got payments that we need to make to our staff, our suppliers, our landlord, our insurance companies, whoever the key input providers are to the product that we might make and package and sell. Or the service that we need to put together and assemble and deliver, and then of course we've got the actual doing of that and then selling it. So there's typically this cycle going on. Now, Hannah, I used to teach accounting at Melbourne Uni back in my very younger days. The hair was fully brown back then and a lot more curly than what it is today. And I still remember one of the professors in the faculty basically saying, to us that profit was a pack of lies agreed upon by accountants. Now, can you tell me as a chartered accountant, what was that professor talking about? Because a lot of businesses, I'm making a profit. My accountant says we're making a profit, yet I don't seem to have any cash available to pay my tax bill. What's going on with this profit is a pack of lies agreed upon by accountants?
Yeah, it's a very interesting concept, and I must admit that you get it sold to you early on, but I think it's purely to probably make the accountant's job to meet the commercial and tax law requirements. But basically, it is that it's just a fictitious number based on a bunch of rules that often change, and it's misleading. And I couldn't tell you how many times I have people come in and go, "Well, if I made that money, where is it?" And I think the most important change that's happened in the industry as a whole is that more holistic approach to this idea of advice has been, mostly on the uptake, and that's important. So cash flow is much more important to a small business than profit, and it's that same thing I think we were talking about the other day. Like, who cares about June 30? It's in the middle of the year for most people. If it works January to December and that makes sense, do it. Tax is only one of the many expenses, and you can actually forecast and save for it along the way. So mightn't be the most favorite chartered accountant for that, but do what suits you in the cycles that suit you and focus on cash in, cash out. Because like you said, Bill, you can't pay for a beer with the profit on your profit and loss.
That was one of the exercises I did with my young accounting students at Melbourne Uni, which was like, okay, let's go down to the pub and let's see, how many beers can you buy with the profit from the exercise that we've done. They say cash is king, queen, prince, princess, non-binary, whatever you want to call it, but it's pretty damn important at the end of the day. I'm interested, Kim, with respect to your business and how you go about, sort of planning and managing the cash flow, in your, law business.
Yeah, sure. So obviously cash is king, and cash flow is really important to all SMEs, even large corporations, because we need the cash flow to pay our rent, pay our staff. What I was very fortunate to learn very early on is know your break even. So if you don't know your break even amount, you can't work out what it's going to cost to run your firm every week. So I worked out what I needed to have in the piggy bank every week to run the firm before worrying about any sort of potential profit. So we look at the break even. We've looked at our tax returns and our BASs, and we've got it down to a T. I have a budget down to a T of what I spend every week. And law, all areas that we do, whether it's conveyancing, wills, criminal, they're all actually seasonal. And I can track them when we're going to have a boom, albeit COVID threw me a little bit, but when we're going to have a boom and when we're going to have a lull. So when the boom's on, I'm pushing money aside because I know for us in January, February, it's never good. Come March again, it's good. So I always have 2 months a year where cash flow is tight, but I have the money there in the reserve sitting aside to pay it. So for us, it was having someone tell me, you need to know your break even when I opened my firm. Without that, I think we would have been in trouble. And it's great that accountants are now teaching their clients this because we don't know. We're here to be lawyers. I'm not an accountant. I didn't know what break even was or how important knowing break even or your P&L was. And these are things as small business owners that we need to get right. And then we can save for those troubled months. And every business is cyclical, different cycles to mine, but that's what we do. So we manage it weekly, and I track every file that comes in on a weekly basis. And I pull a report and I can see if there's going to be a trend in a couple of months to come where there might be a tight area, and I can look at the break even and go from there. So it works. I was very, very fortunate to have someone teach me that.
Yeah, so I think it's a really important thing, that we all learn pretty quickly when we're spending our own money. And I know I had a couple of coaching sessions with Business Advantage members a couple of months or so ago, and both of these people had left corporate jobs and they'd been earning a nice salary, nice superannuation, and going to meetings and doing annual budgets and putting business cases together. And then they started their own businesses. And in both cases, they started online businesses. And one was motoring along, spending a lot of money on Google ads, and was in the skincare products online selling business with a whole bunch of different, international branded skincare products that, people can buy from probably 1,000 different retailers on the internet. and had a digital marketing firm working with them, and they were working out how much they were going to charge for this South Korean brand that seemed to be quite popular. And I sort of had to walk him through, because he was sort of, sales were growing, sort of profit was sort of growing. Now, he wasn't properly calculating profit, but then we sort of looked at what was happening at the bank account balance. And he was growing this business very successfully in terms of the top line. And for every extra $10 of sales he made, he was basically losing $1.50 in cash. So he was, winning market share, as they used to tell us at the Harvard Business School, but it was unprofitable. So, he hadn't allocated the full set of costs to it. And he was, coming up in the Google ranking and doing X, Y, and Z. But every time he sold something, he was losing more money. And the penny had dropped. He'd been at this for 2 years. And the money that he'd saved up to build the website, source the product, to have inventory, all of those sorts of things, he'd actually burned through a couple of $100,000 through mispricing, in that particular case. So it is an important thing. And for the Business Advantage members, that are listening in today, and for everyone else, if you come over and join, we have some really simple tools inside what we call know-how. And one of them is the cash flow forecaster. And so there's a simple little video that explains it, a little implementation sheet if you prefer to have stuff printed out and follow your way through it, and then a very simple Excel spreadsheet, because there is no substitute. And even if you're just using a calculator and a pencil and an eraser to work your way through this and understand that flow, when the money comes in, when it goes out, and even using the last few months of bank statements where you've got it by date, will give you a better handle on the timing of what's taking place. And where the gap is, where the timing gap is. So if you're not doing it, I encourage you to do it. Personally, myself, I'm a bit pale, male, and stale. I still like printing things out and getting a pen out and getting a ruler out and doing stuff. I know that Xero and MYOB and all these great digital tools, you can click some buttons and it'll show you what it is and all the rest of it. In my case, I find it quite useful to use some of the old tools to do it, but whatever works for you. To get caught short, as a number of businesses did at the start of the pandemic, because literally there was not a buffer like Kim puts into her business. And, we have a few businesses here in the Lang family group. We've always got at least 9 months worth of forward cash flow expenses sitting in there at the start of our planning period. That's our rainy day account, just in case something significant crops up. We never expected the pandemic. None of us did, but now we'll always have in the back of our mind, these things could be around for a bit longer. Something else could happen. That buffer has helped a lot of businesses actually survive, not be dependent upon government support. So forecasting using a practical tool or a digital tool to do it is always the starting point to understand the cycle, understand the gap, the size of the gap and the extent of the gap from a timing point of view. Hannah, if I could ask you, perhaps just to walk us through some of the sort of traditional and then some of the newer generic approaches to funding the gap, because many businesses have this gap. It's a chunk of money for a certain period of time. How have people, in the past funded this stuff?
Yeah, so it's obviously, like you said, the hottest of topics, and I like your productive paranoia there, planning for the rainy days which come. So obviously that is option one, which Kim and Bill have both said, is they're essentially retaining profit in the business as cash, leaving it sit there and making sure that they themselves can essentially self-fund that gap, and then in a worse case a downturn. So that is a good option. Obviously, there's other things that you could be doing with that cash. So that's maybe webinar 3 or 4. But then the next and most simple, I suppose, option is an overdraft. So, I know even 6 or so years ago, you would actually be charged even as an individual with most of the major banks. If you dropped $1 under, you could have made the mistake, put it back and get charged for it. There's definitely better options now for overdraft. So you just sort of speak to your own business banking manager there and negotiate that. That can tend to be a little bit more ad hoc. So the working capital loans, this is actually a really cool space because it really, speaking to to some of the major banks. It was small business that was hit harder. There's less agility, and you do tend to operate relatively close to the wire. So working capital loans, there's some interesting new firms that are supporting that space, and that's where you actually plan with these firms, and they provide loans, kind of like a line of credit, I suppose, if you've used that in your own personal life, and they just fund that gap. And then the probably more interesting one is invoice financing. And I suppose Tim's essentially doing a version of this, but you might hear it be called debtor factoring or debtor finance. And there's companies out there that essentially buy your invoice, your accounts receivable, and they take a cut on it, of course. So they free up the cash flow for you. Because if we have a think about, services, so even in my business, so, I did a month's worth of work in November, a couple of days go by and you prepare your invoice and send it, and then it's 14 more days. So you can essentially be 6 weeks short on a service that you provided and have already paid your staff and your rent and who knows what else for. So you have to have issued the invoice, obviously. And like I say, there's a cost to it. And it's definitely the barriers are being broken down, but they're broadly the 4 options.
Thanks, Hannah. And I suppose, Tim, I'm, having sort of been on the beneficiary of the way this has worked with the conveyancer that we've just used. Can you tell us a bit about sort of the key benefits of what Possible does? And then I'll get you to talk us through, well, how do you access it if you're, in the property services sector in particular and want to take advantage of it?
Yeah, for sure. And I think, thanks, Hannah, because that was a good sort of segue to it as well. But where we really exist, I mean, what you're seeing here is what we do for conveyancers specifically. But as I mentioned, we're doing this for a whole host of audiences across that property landscape. But really, what we're trying to do is, it's not like a buy now, pay later, but it's actually just about helping people to fund that gap effectively and get particularly when it comes to conveyances, getting your estimated conveyancing fee up front. You can wait up to 120 days sometimes when you're actually starting out with a vendor in particular who's selling their property, and it's a long time to wait, and it is very standard obviously in the industry to only invoice at the end. Yes, you can take maybe a small portion at the front, but the reality is it's to the end, and that's what people are used to. So what we've tried to do is come in and say, well, if we can help you with that, it's nothing that have to be locked in or anything else. It can just be use it as many times as you want, but it allows you to actually put forward and say, get me more certainty about what cash is going to come into my business, so that I don't have to just be waiting until the end of any of these settlements, particularly if settlements can extend. A sale takes a bit longer than it does. This is the problem that we see being faced across the board, whether it's vendors, agents, conveyancers, brokers, or whatever it might be. So that's where we come in to basically try and help you. Like, it's all, you don't pay anything up front. It's all just done towards the end of the cycle. So you pay on settlement or 120 days, whatever it comes sooner. But the whole idea being, boost your business cash flow, get control back over what you're actually seeing right now. I think there's another slide as well, Bill, for the next one. But it's like, again, we try and make this really, really easy for you. So, you literally can create a request. As I mentioned, create as many or as few as you like. It may be that 1 month is coming up. We talked about understanding where those gaps actually are. Make sure your forecasting is obviously in place to understand when are those lulls going to be. Where could a product like this actually really help me? And I guess that comes back to the whole point about how we exist and why we exist, is that we're not trying to lock you into anything. We're flexible, use us as much or as little as you like. But the whole idea being there is that you can get access to that cash when you need it, fill those gaps, and make sure that you're prepared for what comes next.
Thanks very much, Tim. And again, I think the fact that it's not like you're locking into some subscription and you're paying to then access it. You could do it transaction by transaction. It's an easy thing to have a go with. Perhaps if someone might be getting involved in doing conveyancing for a whole bunch of units in an apartment block, for example, and then there's some issue with final inspection certificates and it's all pushed back, a couple of weeks, or in some cases it's going to be longer than that. You can come and check this thing out and take advantage of it, even if it's only 2 or 4 weeks away, as opposed to doing it at the front end of the 120 days.
Yeah, that's right. And I think it's also, what we've noticed, particularly come back to the ecosystem point, and particularly around sort of Kim, your comments as well, is that when we work with a number of people in this space, particularly vendors will also come and approach their solicitor and say, well, I want early access to that deposit. And basically 90% plus of the time, the buyer will say, no way, you're getting access to that deposit. And that's where we can try and help that as well. So from a relationship standpoint, we operate within a broader ecosystem where you've got a product that can help a specific market, but we've also got other products which can help you with those key relationships that you're managing much wider as well. And that's why I think this all comes down to, how can you just remove a lot of stress points? And going back to the friction point, Bill, that you mentioned, how do you remove that friction out of a process, which should actually be very rewarding for both parties? It's very exciting, but it's also very stressful. But we exist to try and remove that financial pain and the friction that comes with it.
Look, the next item to have a chat about then is thinking about, you've got your expenses. So, we've talked a bit about the importance of these relationships in building a sustainable, successful business that generates good positive cash flow. Certain industries, certain businesses have got issues with respect to the cash flow cycle, the timing of those. There are some traditional ways of funding those gaps in the cycle. There's also now some, more innovative approaches, and one example I've had, Tim talk about, which is fabulous. The other area then is to say, well, what do I spend my money on? Are there opportunities to actually reduce what I'm spending on the key expenses that I've got in the business? And are there opportunities to actually enhance the revenue? Could I be charging more for what I do? Are there things that I'm doing that I don't charge for that I could be charging for? And what I want to talk about a little bit about, very briefly here, is an area that many business owners are not aware of, particularly business owners as in the service sector. And over the last 6 months or so at Small Business Australia, we've helped about 400 businesses understand this and take advantage of it. And this is in the area of what are called traineeships. And if I just take a step back, many of us would have seen, in the mainstream media, maybe on industry associations that we're a member of, that the federal government, under Treasurer Josh Frydenberg, has an initiative called Boosting Apprenticeship Commencements. And the basic interpretation of that by most business people is, okay, yeah, they want more apprentices to start. And then you ask most business people, what's an apprentice? And they go, well, it's someone doing a trade, blue collar, electrician, sparky, plumber, carpenter, etc. But in fact, there are things called traineeships. And so while apprenticeships are typically blue collar, traineeships are white collar. And this, extra $1 billion that's available out there, and it's uncapped, there's now no limit on the number of businesses that can take advantage of it, actually applies to every white collar style office-based business or retail type business that doesn't offer an apprenticeship but can actually offer a traineeship. Now, at a really high level, to tell you what it is, like, there's $32,000 available. If you're looking at hiring someone full-time in the next, between now and March 30th, you can potentially access up to $32,000 over the following 12 months towards their wages, salary, and training costs. Now, maybe you don't need someone full-time. You're going to get someone permanent part-time, and they were going to be a $60,000 a year equivalent full-time job. There's a potential to actually have half of that funded by the federal government. And again, as I said, many businesses just are not aware of it because of, it's called Boosting Apprenticeship Commencement. So, feel free to drop us an email and I can send you to some videos that you can learn a bit more about that. But it's a very real opportunity if you're now needing to gear up the business. The other thing here is I've just got 3 partners of Business Advantage. So an example is Spinifex Recruiting. So, one of the areas of Business Advantage is savings. We not only help our members save time running their businesses, but also save money, because we've got very trusted providers that know what they're doing, that are quite happy to pass on a saving to encourage you to come and use that service. So Spinifex is a good example where if you're looking to hire someone perhaps at a managerial level, in a permanent type of role, a full-time job, they've got their particular fee structure, but there's $1,000 saving if you want to take advantage of that because you're a Business Advantage member. So that's just one example. We've got Hannah's firm there. So, we all say we want to, just want to hire good people, and we're not really saying good, we're effective workers, the right values, self-starters, quick learners, get on with other people, be able to serve our customers well. So I won't use the word good because I think fundamentally all humans are good. Some are a little bit, a couple of percent are there on the dark side, but most people need to be validated as opposed to motivated. And if we validate them, they can be very effective team members, contributors to our businesses. So the select right approach actually helps you determine when you're looking at some candidates, who's going to be a better fit with your culture, with what your business is about. Do they have the values? Do they have the self-starter mindset? So we've got things there that you can save money on when it comes to recruiting. Another area where 70% of businesses in our most recent small business owner census tell us they're going to spend more money on going forward is all things to do with their website, IT related, digital related things. So as an example, Windows 11 is, I think, about to be formally launched. There's a whole range now of new laptops, desktops. So many businesses are looking at upgrading the processing power on the Windows 11, etc. So a company like Dell is a partner of Business Advantage. So whatever deals you can find on Dell out there on the internet, you can get potentially another up to 10% off when you're buying a couple of desktops, for example. So you might be up for 8 to 10 grand, and there's another 10% saving because you're a Business Advantage member. Webforce 5 have just finished with Small Business Australia doing mystery shopping on 50 different website developers for small business in Australia. Gave them all the same specification for the key elements that every business website needs to have now. The quotes that came back range from $950 to $110,000, with the average about $20-something thousand. It's the most common area of complaint that we get at Small Business Australia is this whole digital website internet area. So Webforce 5 will be involved with our next webinar where we go through what those 5 essentials are. But again, for what they say should be no more than 5 or 6 grand and $100 a month, they've currently got available for the Business Advantage members a 20% saving there. So that could be $1,000 off. They have 3,500 businesses in Australia on their platform, all with the 5 essentials that are needed. So I'm just pointing out a couple of things that are there for our Business Advantage members, but investing some time to look around at what you're spending money on and buying it a little bit smarter is going to reduce some cash flow going out. I'm just interested, Kim, in terms of your business and the journey over 5 years, how you think about the management of expenses and continuing to get yourself good value with respect to the combination of benefits and what you pay for things.
Yeah, thanks, Bill. And thanks for bringing up about technology because IT is a big one for us. So what I generally do is I will look at the last tax return, and because we itemize everything and we spend a lot of money on things like IT and subscriptions and stationery, being a law firm. Even in this age, we still print a lot and do things like that. So I always try and have a look and shop around is the biggest thing. Everybody wants your money. And so having someone that will give you a discount is huge. Insurance for lawyers is another big one. And a couple of years ago, for the first time, I shopped around with insurances. I shopped around, I actually changed IT companies and saved myself about $15,000. Same as searching. We've changed search provider 2 years ago, best thing we ever did because we're spending $500,000 on searches and conveyancing. So it's a lot of bickies. So having a look and knowing the numbers, knowing your expenses, doing that budget and saving for it. So we always push money away every week. So you're not left with this big lump sum at the end of the month. The other thing I've learned too, which seems common sense, pay your bills on time, don't pay them early. I was always one for paying bills early for the first couple of years into my business. Pay them on time, don't be late, but don't put the money in their pockets early if they don't need it. Pay it when it's due. Rather sit it in your kitty. Obviously, interest rates right now are terrible, but it's all about planning. The biggest thing is plan and have a look at your numbers. And then you can call around and even the people that you're with, loyalty, bring them and say, hey, I've spent this much with you. I've been with you for 5 years. Can you do anything better for us as we move on? And obviously up your fees accordingly as well. So if everyone else in the industry is upping their fees, check your fees out as well. And that way you can handle your expenses as well as what's coming in and you know what you've got left.